The San Jose real estate market is in an interesting state. Interest rates are up. The news is saying the market has slowed down. Is it true? Stay tuned. I'm Theresa Wellman with Homeowner Experience Real Estate, and today we're getting into the close data for September 2023. Yes, it is here, that first week of October, and we are looking at some of the news headlines that are coming across, and I want to dig into that to help you understand whether this is true for our actual local market. So the first big headline that I saw was this one on Fox News. Mortgage rates jump again amid a housing market slowdown. So we're going to break that apart today. Did the rates jump? How much? Are we in a housing market slowdown? And then this sub header here, it says rising mortgage rates are killing demand as potential buyers face a triple threat. So what does that mean? Here you see our current mortgage rates from Wells Fargo, posted this date, October 6th. We got this data. And as you can see, the 7-year adjustable rate mortgage is at 7.125% for jumbo. Youch, that is high. We were looking in the high sixes last time I've reported. So this is the highest we've seen in a long time. And this is jumbo rates, not conforming rates. So it is really affecting our buyers in our current market. Look at this jump that we had. As the news headline said, yes, we did have a jump in mortgage rates. They've gone up and up, and they have surpassed the peak we saw in the summer of 2022 and are now at over a 20-year high. Which rates, obviously, if you see in this chart here, this red line, have been higher before, but prices are at an all new record as well. Ouch, right? Are we in a housing market slowdown? What does that actually mean? Well, I will tell you, yes, sales are down. Is the market and are the interest rates killing demand? I think we're only going to know by staying tuned because those rates just changed. But inventory is way down. So yes, sales are down, but inventory is way down, keeping the rhythm in the market or the days of inventory the same as it was a year ago. So it really hasn't changed that much from that, but the volume of sales and inventory are way down. So let's look here at the same chart that I visit every month. You will see that prices are up quite a bit in the last 12 months. If we draw this line back here to the summer of 2022, we are up a lot. Look at the slope of that line in 2022. Up, up, up. Now you see the median price, this blue line actually seems to have hit a peak, but the average continues to go up. So even amid these rising interest rates, prices have been going up. And inventory is really down. So that is the triple threat that Fox News article was talking about. Buyers just have a lot of different factors against them right now, which is making it quite difficult to get into the market. Now let's look at it from a different perspective. The average single family home price, 1.787. Yo, that was the closed numbers for September. And that is up 15% from a year ago. So see that slope? Quite significant. Now, again, if you notice that chart, we'll revisit it again. We are not at the peak that we had, but that peak was very short-lived if you watch some of those previous videos that I've done before, and that was a little bubble before the interest rates changed. Buyers are feeling it because look at this, the average of 6.7% over asking price is what they're paying, and the inventory is so super low, 237 homes to shop from, and 200 that we're closing. So there is just not much choice out there, and you're having to still pay a premium and these high interest rates. Buyers definitely feel this. Now let's look a little bit about some other data sources. Zillow is saying that the average price is 1.3. They must be including condos and townhomes into that number because that's nowhere near the numbers I get for single family homes. Redfin says a similar number at 135. But what I want to point out is I don't know why Zillow thinks that housing prices are down year over year. They are way wrong on that. Redfin says they're up 12.5% year over year, but this is August data, so they're a little bit behind. So for the best data, obviously stay here to stay informed of the actual market data. So buyers, how are you supposed to survive in this market? Should you wait? Should you buy? What is going on? Well, the fact is prices are up 15% in the last 12 months. Now that trajectory I know is scary, but if you continue to wait and you look at the overall trend of our market, likely prices are going to continue or maybe flatten. Now, if interest rates continue to go up, that is definitely working against you and costing you more each month. So it is a very difficult market to afford right now, and it's a difficult market to compete in because there's such low inventory that there's still more buyers out there even at these rates. But if rates do drop, there is going to be so many buyers coming into the market and the competition is going to be insane. So right now there's a little less buyers because those rates are pushing more and more people to be scared, but also to just not be able to afford the type of home that they want. So buyers, it is a decent opportunity right now to get into the market if you can afford these rates. If prices keep going up, you're just going to feel the pain more and more. So don't wait. If you want to explore this a little bit more, I recommend you contact us for a buyer consultation. We would be happy to walk through your plans and some of the numbers to help connect you with actual people doing mortgage loans today so that you can understand if these numbers work for you and what opportunities there are for you in the market. Now, sellers, prices are up 15%. You should be celebrating. That is amazing news. There is also low inventory, which means low competition for you, and it is a strong seller's market. I'll bet a little bit softer than it was the last several months, partially because of these interest rates and partially because of the season. But sellers, there is a risk of more inventory in 2024. And there is a risk of less demand if these interest rates continue to get worse. Again, if you're thinking about selling, you want to consider doing it soon when the seller's market is here in your favor. If you'd like to get more information and learn how to prepare your home for market or things that you need to know about selling, you should check out our seller seminar. I've got links below to the multiple opportunities we have to attend that seminar. All right, so what's the outlook? I want you to be informed of what's going on. And here's an article I found on Yahoo Finance talking about the parallels of today's market with the 1980s. In the 1980s, the housing market was very unique because there was high inflation, surging mortgage rates, and pent-up demand for homes because there was a growing demographic boom, just like we have today. But back then it was the baby boomers. Today it's millennial generation coming into more households that we just don't have housing for, which is what's causing part of our housing shortage. And then you add the increase in interest rates, making it difficult for move-up buyers who already own it, have a 3% rate. They are not as motivated to get moving. And they might realize with rates not improving anytime soon that they're gonna have to move, which is a scenario where inventory could increase. This is why you wanna stay tuned and keep watch of the actual data of what's going on here in San Jose. You fast forward to today and you compare us to the 1980s, definitely, we've doubled our interest rates from 3 to 7%. Millennials, like I mentioned, are driving and have so much pent-up demand. Market is just quite crazy right now. The other similarities is that it says in 1979, prices surged 16%. In the pandemic, they surged over 21%. And if we go back and look over 3 years, we're up over 30% from the beginning of the pandemic through today. So quite a huge jump in prices. And what happened in the 1980s, they had that surge in growth with interest rates really increasing and then prices just flatlined. So is that what's going to happen again? Hard to know because we've had home sales plunge just like they did in the 1980s. So very possible that our market could flatline and hold at these rates. Do prices go down? That's going to be a good question, but I think we already had a really big correction in 2022. So it's hard to imagine that's going to happen again moving forward. But there is a lot of risk and multiple factors going into this that could affect the market. Here's one outlook on interest rates. This is from Goldman Sachs. They are revising their forecast where they at first thought we were going to be in the high 6s and improve in 2024. They're now saying, well, rates are going to be over 7% throughout the rest of the year. And in 2024, we're only going to see a slight improvement to the high 6%. Ultimately, buyers, sellers, stay tuned. Homeowners, stay tuned to what's going on in the market because rates may slightly improve, which could help demand a little, but probably not significantly. Will inventory increase? That's another big question, right? So it's an interesting and difficult market. So reach out to talk about your particular situation. I'm Theresa Wellman with Homeowner Experience Real Estate. Thank you so much for joining me. Please do post your questions, comments, and give this video a like if you found this information informative.
I get a lot of requests asking how to keep up to date on our content and local events. So I recommend you sign up for our education-focused newsletter at homeownerexperience.com/newsletter. Once you do, you will get educational videos including professional insight on the San Jose housing market, interviews with experts to educate homeowners, and get invited to our local events. Our mission is to revolutionize the real estate experience for you through a focus on education, transparency, and an unwavering commitment to your success. And the newsletter is a source to tie all the content together for you. Sign up, and if you don't like it, no worries. Unsubscribe anytime.